Chicken Genius Singapore just pivoted his position on Tesla stock today. He now says it is not safe to buy Tesla stock, which is a pivot from his last position, which was Tesla is at levels you can start dollar cost averaging. Risk is 140, reward is 300, favors an entry. But he did say do not go all in, as his S&P 500 target was 320 for the specific ticker SPY, which is still very far from his target of 320. So why is Chicken Genius Singapore changing his position? Which, by the way, I don't think there's anything wrong with changing your position. I think if you are a trader, you will change your position basically daily. And Chicken Genius, he is a trader, I believe, more than a long-term investor. So this is expected, and I like him as well. The reason why he believes it's not worth the risk is because of geopolitics and specifically China risk, which I do see China as a big risk, and I'm fully prepared for that if it does happen. But if you are a long-term Tesla stock investor like me, expecting to hold the stock until at least 2030, I believe the main reason why you would expect Tesla stock to 10x or more is because of full self-driving. You can add robots on top of that. You can add energy on top of that. You can add Tesla insurance on top of that. Insurance would be a very small part of Tesla business, but you can add all of those other things. You can add solar panels and all of that. But full self-driving really is the main thing that I would see would make a big difference immediately. And as you personally know, I do trust Elon Musk, as in I don't think he purposefully lies. Now, him selling, when I look at this, one time, coincidence. 2 times, maybe still a coincidence. 3 times, I don't think so. 4 times, yeah, probably not. I look at full self-driving and it's getting better. Look at this drive from Holmar's Catalog YouTube channel. Big shout out to Omar. When I look at this, I see progress. Just watch this for 2 minutes with me, and then we will dive into other things that will assure you about Tesla stock, or at least they certainly assure me. Like, it handles this, no problem. I just watched an interview with Ross Gerber, who is a big Tesla stock bull as well. Interview with Warren Redlick. And Ross said on that interview today, earlier this year in LA, he lives in LA and he has a very hard drive to work. He would have something like 12 interventions on FSD beta, and he felt that it was not safe. Like, from what I understood, he basically felt it was maybe even easier to drive by himself than to let the car drive itself. But now it's the opposite. Now it's only something like 2 interventions for him. So it went down from 12 to 2. That's huge improvement. And remember that AI models, if you look at the last few years, the number of parameters in AI models is growing by 10 times per year on average for the last few years. That is a lot more than Moore's law. And look at this turn. This is not an easy turn exactly. The car figured it out, no interventions at all. Amazing. So AI models are growing much faster than the Moore's law. So I would expect FSD to certainly be solved. What's the timeline? That's very difficult to time. I mean, people can't really even time a stock market, and they think they can time FSD. One thing that is very clear, and it's so easy to tell. I mean, look at this video and tell me this is not better than a year ago. Oh, come on. How can you say it's not better than a year ago? Clearly, it is much more better. And then show me any other solution that uses vision, that does not use LiDAR, that can do this basically in any place in the whole world. Once Tesla's FSD is going to be ready, it will be ready basically almost in any place in the whole world. With LiDAR and HD maps, you can only do that in specific areas. And look, even here, is it going to figure it out? Wow. Okay. Well, I think this was a pretty impressive drive. What do you think? Those of you who are newer to investing and bought Tesla stock at rather high levels and now your whole portfolio is in red and you were not buying like me in early 2019, I feel sorry for you. It sucks to look at your portfolio and see that it's down. And I personally, when I put money into a single stock, for example, like Tesla, I assume I basically don't have it unless I actually sell it. So no matter how much it goes up, I don't get excited. When it goes down, also, I don't get nervous. So there's no positive emotion and there's no negative emotion. I will be excited once I sell it, or I will be sad once I sell it, if I ever sell it at a loss. This is a return chart from Bridgewater, the world's single biggest hedge fund in the world, run by Ray Dalio. Those of you who are trying to time the market, you can see that the blue one is S&P 500, that's a market, and the orange one, that's Ray Dalio. He went to Harvard, has hundreds and hundreds and hundreds of people that work for him that also are extremely smart, and yet he can somewhat time the market, but he cannot. I mean, if he was able to time a market, this is the return that you would see is you would see him selling here, which basically he sold earlier, right? So he sold somewhere here, let's say, and then he benefited from not having this gigantic drop, but then he didn't buy in here. So he didn't time the bottom, so he missed on that extra growth. So if the smartest people cannot time the market, if you bought at a higher price, I wouldn't be upset that you bought at a higher price. I certainly am not upset that I was buying earlier. You can certainly reduce your volatility and flatten out your return so you don't have crazy highs and then you don't have crazy lows. You can certainly do that if you time the market. And because we retail investors, we don't need to manage a fund that's over $100 billion. I mean, if Ray Dalio bought $80 billion of Tesla stock, and then if he sold, let's say, $4 billion only of stock, we know how that may look like. So imagine selling $4 billion and you still have something like 75 or 80 billion or 50 billion if you manage a big fund. So that is one reason why it gets very difficult to beat the market. But for us Tesla stock investors, retail stock investors, we do have that advantage where we possibly could beat the market even if we are not as smart as someone who went to Harvard. Ray Dalio has hundreds of people that work with him. But I see some Tesla stock bulls that bought, at the high and now are upset that they bought there. Hoping that they still believe in Tesla stock, by the way, they believe in the company, but they are upset. They are angry. How come I bought it at this high and now I'm down 20% or 30% or 50%? Don't be upset because we know you cannot catch the bottom. You can smoothen your returns if that's what you're looking for, but in the end, your returns will still be the same over a very long period of time. Now, if you are very close to retirement, that is different. But if you are on a younger side like me, then don't get upset. And if you're closer to retirement, then you can consider adjusting your risk a little bit. Also, you guys know I like Cathie when it comes to Tesla stock. She has very good insights for that. And now, when it comes to interest rates and inflation, which high interest rates, not exactly good for any stock, but she believes that maybe we might be in the roaring 20s. If you know the history, 1920s was an amazing time for the stock market, and she believes maybe we could have the same thing. Basically, what she's saying is the last time several general purpose technologies evolved at the same time, sort of like what we have right now, telephone, electricity, and the internal combustion engine, we had an amazing time. the thread is quite interesting. If you like, you can pause the video if you like to go through those. But I have a few more thoughts. Number one, and also if you know who Peter Zeihan is, he strongly disagrees about saying inflation is going to slow down. What's my take on that? You know how some people say if you go back on the gold standard, everything is going to be fixed. Yeah, I don't know. Remember this number, and the Great Depression started a little bit before then. I would love to go into more detail, but I don't want to keep this video too long. Let me show you one more thing. This is a Deutsche Bank report. I grabbed this from Meet Kevin's video. You know what they say about investing? You don't really want to look at the past because the past does not guarantee the future. And that's generally true, but I have found that approach usually works much better than listening to so-called experts saying, oh, this time, no, this time is different. If you guys have a link to this report, I would love it because I looked for it and it's difficult to find and just easier to take this from the video. So I'm going to cover Meet Kevin here. But this is what happens when inflation reaches 8%. So it reaches 8% right here. And this, they analyzed 318 global episodes back to 1920, looking for what would happen. So you can see right here before high inflation. This is inflation, and right here it reaches 8%, and then you can see for how long it stays high. Right now, and remember, this is 318 observations. This is not just like, oh, we got 2 random anecdotes here. No. And the current data, Bloomberg consensus, not exactly current, but close. It's basically assuming that our case, because we are so special and this time is so different from the norm, that this time, don't you worry, we got you this time. The inflation is still transitory. Oh, did I say transitory? No, it's not transitory anymore. Okay, interesting. So me personally, as an investor, I oftentimes, not always, there are always exceptions, but I like to plan everything looking at the average case scenario, not the best case scenario, unless it's absolutely obviously clear it's extremely different. So if you're looking at full self-driving and you're comparing Tesla with anyone else, that is extremely clear. Tesla has the best solution. But Tesla is going to benefit from this because Tesla has the highest margin. So Tesla can drop its prices the most and people will only buy Teslas basically because that's the best economical decision. So Tesla would actually benefit from this. The stock price would actually temporarily would be heavily suppressed, but long term, Tesla would take all of the market share. And for Cathie, you have to also think about, is she speaking from a point of, this is what I actually believe, or is she speaking from a point of, this is what my company needs? I like Cathie. I don't know her nowhere near as well as Elon Musk. So when Elon Musk speaks, I have great context to know that he is not, I know when he's playing games, and that's fair game, but I don't think he ever does anything where he purposely misleads people. But then your fund is down basically 75-ish%, and you would benefit from reduced interest rates. I don't know if I would take that as the most objective source of information. Of course, I think the insights are valuable, but just a quick reminder to, if you do want to make yourself believe that inflation is really going to be slowing down, I hope it will. I really hope it will. But I wouldn't be so quick to be convinced of it. And Chicken Genius does have a point here. Now, my take is, if FSD really comes out and it really works, I believe FSD will beat anything that happens to macro for a simple reason. Let's say Tesla sells 20 million vehicles. So if we do that, which most bulls believe that. Now this is more of definitely my bull case. This is not, I invest based on my bear case. I make sure that I like my bear case. If I get my bear case, I'm still happy. This is not that. I just want to be very clear. I'm not saying this will happen, not at all. But if FSD happens, and if you put in what most bulls think will happen, at least the hyper bulls that is, you got 20 million sales, which is Tesla's target by the year of 2030. And then how much is each full self-driving option going to cost? Right now, it's 15,000 US dollars in US. Maybe they will increase it, maybe they will not. We will never have a 100% take rate, but if a price does not get increased, would be a little bit strange, wouldn't you think? So let's just say 15,000, just to keep things super simple, all right? And that gives us $300 billion a year of income. What PE, price to earnings multiple, do you want to give? Do you want to be really conservative and go with Toyota's price to earnings ratio? Okay, we can do that. Let's times that 10, and we got $3 trillion market cap. That's basically a 5x from where we are right now today. If you want to give it a 20x PE multiple, which is basically oftentimes that's where S&P 500 trades at. Sometimes it's above that, oftentimes it's below that. But that's not an overly high PE multiple. That would be 6 trillion. That's where you get your 10x. And this can easily go much higher. I think this could go up to 10 trillion or at least 9 trillion just from FSD alone. I think it's possible. Mind you, that's a bull case. That's why I believe no matter what is going on, the global environment, geopolitics, macro, if full self-driving is really solved, Tesla stock will do really well in my personal deep conviction. Not financial advice, but that's what I'm doing with my stock portfolio. That's the only stock I own, and that's the reason. That's why I'm not trying to time the market, because how do I time full self-driving? I don't know. And I don't think anyone really knows, because you can't practice how to time full self-driving because we don't have a technology that's exactly sort of like this, that we can predict. You know, the stock market things happen over and over again. It's human psychology. You got bubbles, it's numbers and psychology, and it's predictable to a certain degree. But full self-driving, I don't know, how do you predict that? So I'm not going to even try. I just have my money in Tesla stock and I'm waiting for it to happen. Usually experts are way wrong when it comes to predicting new technologies and how fast they adopt. Usually they are wrong in a sense that they think it will happen much later, but it happens much sooner. And with full self-driving, we do have quite a few experts that believe it will happen before 2030 and even some in the next few years. So it would appear to me that the consensus between those that think it will happen, that it would happen before 2030, and if you know anything about experts when it comes to technologies, they are too pessimistic. So I'm just betting my money it will be solved before 2030. Hopefully, very soon. That would be awesome. And if you are not in Tesla stock when that happens, goodbye to your 10x. It's not gonna happen then. I don't believe. I know some say for full self-driving, how about regulators? I don't think regulators will be an issue at all. I will make a separate video about that. A bigger potential risk that I think is for full self-driving is tax. Because it will put a lot of people out of their jobs. I think there could be a hefty tax on full self-driving. That's, I think, the real big risk. If it's 20%, no big deal. 50%, that would hurt. If it's more than 50%, that would not be very good. These are 48 reasons why I only own Tesla stock in my stock portfolio. My name is Matt Posius. I'll see you later. Make sure to like this video and subscribe if you haven't yet. Thank you for watching.